Brad Thomas here with the street. Here at Recon 2014, everything retail. I'm here today with Dave Henry, the CEO of Kimco, ticker symbol KIM. Dave, good to see you today.
Nice to see you again, Brad.
Great, Dave. Let's jump into your earnings. First quarter earnings, you had some really nice leasing spreads, so it looks like your leasing business is performing very well. Can you talk about that?
Sure. Basically what's happening overall in the shopping center industry, quarter by quarter, things are getting better for us with a 35-year low of new construction, 5-year high of new store openings. You're seeing leasing spreads being very positive, effective rents going up, occupancies going up, so both Kimco and the rest of the industry are doing quite nicely.
Great. Let's talk about your transformation. Kimco over the years has been evolving into I guess a smaller REIT in terms of the number of assets, but you've been buying, pruning off some lower quality and buying some higher quality. Can you talk about that transformation?
Yeah, we've been emphasizing some of the primary markets where we think the retailers want to be long-term, where there's good job growth, good population growth, and we're emphasizing larger properties. And so the other side of that is selling a lot of properties that we have, perhaps in the suburbs that are smaller properties, secondary markets, if you will, tertiary markets. So beginning in late 2010, we've sold about 160 properties, about $1.5 billion of properties over that time, and we've recycled that money into better quality properties.
Sure. Well, let's talk about the balance sheet. I know Kimco is one of the few REITs with a BBB+ or greater investment grade rating. I know you're proud of that, but how are you putting that balance sheet to work?
Well, we've done a number of issues over the last couple of years to take advantage of historic low interest rates. We've had 2 preferred stock issues at all-time record rates. Most recently, about 2 weeks ago, we had a 7-year bond. We floated $500 million at 3.2%. So it doesn't get much better than that in terms of interest rates. So we're trying to finance long as much as we can and take advantage of these rates today.
Sure. Well, Kimco is still the largest shopping center REIT in the U.S. You're also in Canada. Can you talk a little bit about where I know you've sold some properties, I believe, in Mexico and Latin America. Can you talk about where you're focusing today on acquisitions?
Yeah, generally it's the U.S. and some of these primary markets where, as I mentioned, we see long-term job growth. So, for instance, the New York metro area, Baltimore, Washington, Philadelphia, Florida, Texas, Southern and Northern California, Denver, Minneapolis, Seattle, Portland. Those are some of the primary markets where we think that there's going to be good growth in retail rents over time.
Sure. Now there's a number of new shopping center REITs that we've seen listed, and there's a few more coming down the pipeline. Can you talk a little bit about consolidation? There's I believe around 20 or so REITs today. I know Kimco is one of the longest with that track record, but can you talk about what do you see in terms of consolidation in that space today?
Well, people talk about it, and I think a lot of people would like to see it, but the truth is, if you add up all the public REITs together, we still only own about 10% of the 140,000 shopping centers that are out there. So 90% of shopping centers are still in private hands. Most of the REITs have weathered the Great Recession. They all have boards and a management team that are deploying a strategy that they think will work and drive their multiple up. Stock prices are still down from where they were before the recession. So I just don't see a lot of consolidation happening at this point in time.
Great. Dave, thanks so much for joining us today.
Thank you.
Appreciate it.
Thank you.